Hello, everyone. Happy Sunday. This is going to be the most important week so far of the month. We are going to have extremely important news, lots of different important earnings reports as well. Earnings have been doing very, very poorly so far. We saw Tesla earnings, we saw Intel earnings, we saw lots of different companies report bad earnings. How is that going to affect the new earnings for the large tech stocks this week? All right, so we're going to take a look at all of those different things. And we're going to piece the entire market together. We can't really be bullish up here, but we also can't just blatantly try to short this strength. So we're going to have to make the best informed decision. So with that being said, I hope you guys have a wonderful Sunday. I'm back to make these videos, and we are going to take a look at the overall market, the S&P, the NASDAQ, the Russell, everything as a whole. Hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and let's get started with the video. All right, so number one, we have the chips, the large chips, also beginning to have earnings Tuesday. So Microsoft reports earnings after hours, Google reports earnings after hours, and AMD reports earnings after hours on Tuesday. Wednesday, we have Qualcomm, Boeing also reporting earnings, MasterCard. Then on Thursday, we have Apple, Amazon, Meta reporting earnings as well. So this is the beginning of very, very important earnings. So one thing that you guys have to remember is that heading into earnings dates, there can be something that we call an earnings run-up, which means that heading into earnings, right, the price of stocks can generally pump upwards into that earnings day. So if on Thursday we have Apple reporting earnings, on Thursday, into the close of Thursday, from Wednesday to Thursday, basically the prior to earnings, the price of Apple can increase into that price in anticipation of the earnings. That's what we call an earnings run-up. So there can also be an earnings run-up for Microsoft, and because it's going to be the Microsoft, Google, and AMD, because it's going to be right at the beginning of the week. Therefore, it could cause the market to be a bit bullish. Now, from a technical standpoint, Google, specifically AMD, these stocks are very overextended to the upside. But we'll take a look at that more. But earnings run up. I hope you guys understand that so far. All right, so understanding Tuesday is when the first barrier of all of these earnings begins, right? Then Wednesday, during the market hours at 2 p.m., we have FOMC statement and the federal funds rate. And then 2:30 p.m., we have the FOMC press conference. So this is obviously very, very important. We're going to get a speech from Powell. He's going to be explaining how things are going. And always, whenever this happens, it ends up being a very tumultuous and difficult time to basically hold, really, right? Because it becomes very volatile. So Wednesday is very, very important as well. So Monday, Tuesday, there isn't much going on in terms of large earnings and in terms of news. So we should see some clarity, and we could end up doing well. That's why the earnings run up heading into Tuesday can end up being a real thing, in my opinion. Because there just is a lack of news occurring. But then Wednesday, Thursday, we have the rest of the earnings. That's when things get a bit difficult. So now, with that being said, let's take a look at the large tech stocks, because they are the main driving force of the market as a whole. So we need to see how they're doing. So number one, over the weekend, I wanted to be very bearish tech. I wanted to be very, very bearish. I was going to buy puts on Apple. I was going to buy puts on NVDA. I was very, very bearish. But I wanted to be safe. So this is not a bullish setup on Apple. This is the type of setup. Obviously, we're getting to a level of support. And so far, we've seen whenever a level of support has come, it ended up bouncing. But this is really starting to curl over, and it looks bearish. I wanted to buy puts on Apple. So basically, this is not a really bullish setup. We could end up breaking down to 190, and at 190 it would be a better opportunity to buy, in my opinion, and for a bounce. NVIDIA, first of all, the chips are very, very overextended, but you cannot automatically just become bearish on the chips because these are the biggest winners. Whenever we are at a level of support on the chips, we end up flying afterwards. So this ends up being very, very difficult to just overtly be bearish on. But this is also not a completely bullish setup, but the problem is being bearish or trying to short chips. It's almost, you're basically guaranteed to try to lose money. It's very, very risky. So instead, AMD looks much worse compared to NVIDIA. And also AMD had earnings. It basically is reporting earnings Tuesday. So the other reason, so I wanted to go short on Apple, and I forgot the other stock that I want to go short on. But in general, the reason why I'm showing these chips, right? The reason why we have to look at the chips is because the chips have been the biggest winner. When NVIDIA, when AMD are starting to show bearish setups, when INTC is reporting bad earnings, when SMCI, all of these chips are having extreme moves to the upside, right? If you're a bull, you want the price to continue rising. How is price going to continue rising at such an astronomical rate? If it can't continue at an astronomical rate, it either needs to consolidate or it needs to give a pullback, right? So therefore, it's tough for to see the rest of the market propel forward. And that's essentially what I'm looking at. With these chip-related stocks, things are getting very, very overextended. And we're starting to see weakness in earnings. And these technical setups just aren't looking as good either, all right? So now that we did that, let's take a look at Google, all right? Google, clearly very, very overextended. Being a bull here on Google is very, very risky because we're very overextended and we have earnings as well. Like in terms of swinging over the weekend, it's difficult to try to be bullish on Google over the weekend here because clearly the chips are showing weakness, Apple is showing weakness, and we'll take a look at the VIX as well. But this in and of itself is clearly very overextended. Microsoft, similarly a bit overextended, not as overextended in terms of the Bollinger Band, right? Granted. Let's take a look at Amazon. Amazon is, continuing to do pretty well, but this, we have earnings on Thursday for Amazon, but this is not as overextended as the others. Amazon gets a lot of love from the IWM, from growth and economically sensitive stocks. So when economically sensitive stocks, when the Russell 2000 is doing well, then Amazon also does well. And we've seen the Russell basically be the biggest winner thus far over the past few weeks. So Amazon is continuing to do well. We look at Tesla, though. Tesla took a hit for earnings as well. We actually bought Tesla calls. Excuse me. We actually bought Tesla calls. This ended up doing pretty well. We saw 20% gain on the swings. We got into Tesla swings. So then those ended up doing well. We're still holding. We took some profits, but now we have a stop loss for break even. My thought process is we could continue rising, but it would be much better to buy into Tesla around 173, 175 area. That would be a safer spot. But Tesla is clearly showing weakness. It's one of the stocks that showed clear-cut weakness so far, right? And the other stocks, Netflix did really well with earnings. But Netflix is now getting really overextended to these crazy overextension big fib levels. So now, tech stock in general, they're either showing bad earnings or the winners are very, very overextended. When that's the case, it becomes very difficult to be a new bull. Being a new bull, this is a chart of the NASDAQ, right? being a new bull when things are starting to show weakness, when the winners are starting to show overextension, is a bit difficult. All right, so far we saw all the large tech stocks. This week, in the short term, we still could see a bit more strength, but it's becomes a bit difficult, and that's the only reason why I didn't go short Apple. I would have went short Apple, and but there's just, we could see a pop. I was being very, very hesitant. I would generally always go short Apple over the weekend, but we didn't, only because of the potential earnings run up. That's it. So next, let's take a look at the VIX. All right. So the VIX is important to look at because it shows an inverse relationship to the market. When the VIX is rising, then the overall market is bearish. So right now, the VIX has been holding a level of support, and it's basically in an uptrend, right? And this makes sense because the overall market is teetering at levels that we haven't seen before, and there's a lot of volatility. We can see that basically every time we come and see this level, we've seen a bounce, right? So we also bought into VIX calls. Those ended up doing well as well. So essentially, if the VIX can break above 14, that's obviously going to be very bullish for the market. But in general, the VIX is not showing weakness. Yes, this is a bear flag on the VIX, whatever, right? Bear flags are usually very bearish setups. We break lower, but I don't think that's going to end up happening down here on the VIX. And just the fact that the VIX is starting to be in an uptrend is a bit worrisome for the market, in my opinion. But again, this week is going to be very news and macroeconomics driven. From a technical standpoint, the S&P, the NASDAQ, all of these stocks look bearish. We were in puts, we were in put swings, we were in call swings. We're getting plays and we're swinging plays, and they're working really, really well. But I'm saying objectively right now, over the weekend, these setups right now are not bullish. But you know, we have a lot to see for this week. It's going to be very, very fun. Swinging anything next week is going to be a bit more difficult as well. It's going to be very risky. So I hope you guys take that into consideration. And I hope you guys had a wonderful last few weeks. And definitely, we just have to continue looking at the market one step at a time. Be cognizant of the potential bullishness that we're going to see in the market prior to these earnings. But overall, the earnings have been taking a hit, and things do not look too great. So I hope you guys enjoyed today's video. I hope you guys have a wonderful Sunday. And yeah, love from the East Coast. And I will see you guys soon. Thank you. Take care. Have a good one.